The growth of international trade, e-commerce and the digital economy has led to a significant jump in cross-border payments connecting businesses and individuals worldwide. Treasury teams don't just have to ensure transactions are fast and secure, they need to position to benefit from the emergence of mobile wallets and alternative payment methods, navigate currency conversions and anticipate complex regulation coming down the line. I'm Sarah Rundell from Treasury Today Group, and I'm joined by Standard Chartered's Anand Natarajan, Head of TMT Cash Sales, and Michael Oskar Kleinsteuber, Head of Standard Chartered's Prism FX for Europe and Americas. Together, we're going to discuss how Treasury teams can prepare to ensure they tap all the benefits of the payments revolution. Hello, Michael and Anand.
Hi, Sarah.
Hi, Sarah.
So, Anand, I'd like to start with you first, please, and Mike, then do jump in. Could you set the scene for us? What are the key trends in cross-border payments today?
Sure. Thanks, Sarah, and good morning. Thank you for having me. So I think you touched upon some of the key themes, right? So which is international trade, e-commerce, the digital economy. If you look at the evolution of these sectors over the past few years, what has led to that is essentially the fact that we are now in a world where we are witnessing the rapid evolution of everywhere commerce. And what that means is businesses of all sizes, whether it's a startup or whether it's a global giant, they're reaching customers now across borders with unprecedented ease. A few years ago, when companies were thinking of starting businesses, usually they would look at starting local first, do domestic payments and do domestic collections for a few years, and then think about doing cross-border. But based on all the recent technology developments that we've seen in this segment and some of the changes in this space from a regulatory standpoint and from a solution standpoint, it has now become much more easier, and the barriers to entry have been lowered a lot when it comes to doing international e-commerce. So if you look at a recent report by McKinsey, the total volume of payments globally in 2022 was 3.4 trillion, equating to around $1.8 quadrillion in value. Now, of this, the cross-border piece itself is more than $200 trillion. And if you look at where this is going to go over the next few years, the payments market, the cross-border payments market specifically, is expected to reach over $250 trillion by 2027 and $290 trillion by 2030. So these are some big numbers, right? And how do we then tackle all the challenges that come with it and make sure that we are actually developing solutions that scale in accordance with this growth? I think that will be a big focus for banks, financial institutions, fintechs, and companies alike. If you look at how this payments volume is split overall, you see B2B payments accounts for the largest volume, which is somewhat to be expected, around $145 trillion, followed by B2C and C2B, so business to consumer and the consumer to business volumes as well. The other big trend would be around real-time transactions. It started off around a few years ago within a few specific countries, but this is now becoming an increasingly adopted trend globally. And as of 2023, we now have 70 countries around the world that have now adopted real-time payment systems. And this will, over the next few years, significantly change how some of these cross-border payments happen as well.
Oh, thanks so much. Quadrillions in value. Mike, could you add anything to that?
Yeah, I think everything Anand's saying is true and incredibly important. I think some other related trends that are becoming more and more important. The first is that any flows that involve a consumer, either business to consumer or consumer to business, are growing at a much faster rate than the rest of the flows. And I think we've seen that play out over the last few days. Just at the kickstart of the Black Friday, Cyber Monday season, most venues have had record sales, not just in terms of same currency, but in terms of cross-border. And that's obviously driven by consumers paying businesses. And in many cases, these platforms are then turning around and paying merchants who might be small businesses or consumers themselves. The other related piece of the trend is that all of the trends that have been playing out in the consumer payment space in terms of expectation of transparency of status, instant value around payments being moved from consumer to consumer are going to continue to push into the Treasury and the B2B space in terms of expectations, not just expectations of payers and receivers, but expectations for how Treasuries manage service levels around their providers, whether they're payment companies or whether they're banks. And then the last piece is the world is only growing more fragmented and more complicated because of supply chain disruption and supply chain change, because of macroeconomic pressures and geopolitical changes. We've seen many new important corridors start to develop between Asia and Africa, between Asia and Latin America, between many corridors now hubbing into the Middle East. And so the optionality around being able to move money in different ways and being able to move money into different corridors that weren't so important a few years back is becoming much more important for any treasurer to think about in terms of managing their practice.
Oh, thanks for that. So there's a lot going on there. So could you speak a bit more about the sort of the main issues companies face regarding smooth cross-border payments? So cost, fraud, the lack of standardization. Mike, do you want to continue on that?
Yeah, absolutely. There are so many new venues that companies, treasuries, providers need to think about. One is, as I mentioned earlier, the new emerging important corridors, whether it's China to a particular country in Latin America, Africa to China, as examples. These are corridors that, because of the new increase in sheer number of payments and demand on both sides, organizations are having to grapple with what that means from both a regulatory perspective and a liquidity perspective. And it also means that they need to find providers who are going to be, easy to use and resilient in order to serve those flows. So there's this sense of optionality around how money can be moved, how it can be delivered, and how organizations can more quickly react to corridors that will continue to change and develop. With the coming year, with the change of administrations in a number of countries around the world, the expectation of fragmentation and change in both the regulatory and cost space, I think the expectation is that will only continue to increase. And so in the same way that organizations were thinking during the global pandemic around physical supply chains, I think there's a concept of organizations starting to think about money movement and in an analogous way, the supply chain of money that they have, both to run their business as well as to collect money and pay important providers, merchants, employees, et cetera, and start to be able to build out platforms, processes, and operations that provide more resiliency and ability to change venues quickly as the world changes very quickly in front of them.
Fascinating. And Anand, would you like to add anything there on the issues affecting smooth cross-border payments?
Yeah, I think the big area for a lot of companies to focus on, both in terms of innovation and also leveraging the existing technology, is going to be around just the speed of payments and transparency, right? So I think while we've talked about how some of these changes could impact and actually be a challenge, I think one area which could actually be helpful for businesses is specifically around the ability to now receive in multiple currencies around the world. Now, imagine a business which is sitting in let's say, a remote part of Asia or a remote part of Africa. And historically, these businesses wouldn't necessarily have the ability to demand a payment in a certain currency. Any company that is making a payment to this business would probably just want to pay in one of the big currencies like dollar or euro, a pound. And then the local business would now have to figure out a way to convert it into the local currency. And that may not actually be the most cost-effective way for them to do so. But this trend is now quite changing quite a bit as well, where the senders, which are often the larger e-commerce marketplaces, for example, they now have the ability to make payouts in multiple currencies because of how the technology has changed and the transparency that comes with some of these technological changes. Businesses now have the ability to receive in local currencies directly from these e-commerce marketplaces. And that allows for greater visibility on cost and transparency for all the parties involved. So while some of these are challenges in the true sense, I think out of these, we've definitely seen a lot of innovations that are starting to benefit all parties in the ecosystem as well.
Yeah. So you talked about e-commerce platforms are at the vanguard of changing cross-border payments. They offer a great window into the future. How are they changing how they receive and make payments? Anand?
Yeah, so I think in terms of Linking this back to a point we were making earlier around the instant payment evolution, right? We now have 70 countries that have adopted real-time payments in 2023, as I mentioned. This number is going to probably go up to more than 100 countries in the next 2 to 3 years. So there's an increasing trend of countries shifting to instant payment schemes in various parts of the world. And with instant payments, there are a lot of corresponding evolutions that are happening as well from a technology standpoint, where there is an increasing prevalence of QR code-based payments, right, or alternative payment methods, where you're no longer generating an invoice and then paying a business on the back of that invoice, but now businesses can just send out a QR code. Any person who can scan the QR code can automatically get the payment out from their bank account to the beneficiaries. So this is an increasing trend that we are seeing, especially in Asia, where there's an adoption of QR code-based payment methods that now the e-commerce marketplaces have to be able to solve for, because that is becoming a trend that you can't just sit out of. The other idea that is gaining more traction is around mobile wallets as well. And you see this a lot in Africa and to some parts of Asia as well, where there are many parts of the countries in some of these regions in Africa and Asia where people may have access to a bank account, but it may not necessarily be the most conducive for them to go and withdraw money from a bank or even have an online bank account. But everybody has a phone and everybody has data. And with that comes the ability to just open up a mobile wallet with some of the local providers out there. And this means that they can now send and receive money out of these mobile wallets as well. And then the last thing I would say is around, given instant payments are becoming more prevalent, the important thing to realize about instant payments is the finality of payment, right? Historically, when you made an ACH payment, you could always, and if you think the payment was made in mistake, you could always raise a dispute. And there is a dispute mechanism that exists today for ACH to get your money back. And with instant payments, that is not necessarily the case. There is the concept of finality of settlement that comes up with instant payments. So for Treasury teams, for payments teams alike around the world, it's important to ensure that when they are making a payment to the beneficiary, that they are able to validate that the account actually belongs to the beneficiary and that the account number and the details they have are valid. So that we are also seeing an increasing trend of account validation solutions that are cropping up in many of these spaces around the world as well.
Interesting. And Mike, could I come to you for innovation around how Treasury can manage FX risk inherent in cross-border payments for a little bit more on that?
Absolutely. And I think it's an interesting segue, because we were talking about e-commerce companies, and I think a lot of what's happening there is kind of driving into Treasury more broadly. If you think about what the e-commerce companies have been doing, they're really standing in a space that before the internet was going to be a cross of retail operations and Treasury operations in a traditional company. They're standing in between the goods on the shelf and the buyer. They're standing in between the store and the actual supply chain operations. They're standing in between accounts receivable and accounts payable and the credit card acquirers or the other incoming payments. And money movement is absolutely core to these e-commerce companies in a way that is probably different than it had ever been to other companies. And because of that, the e-commerce companies have been forced to think about accounts receivable, accounts payable, treasury, cash conversion cycle, foreign exchange, liquidity, and hedging in a more unified way than I think most traditional companies have had to, or they've certainly had to do this at a more accelerated rate to optimize their own operations. So to what Anand was saying earlier, it used to be good enough just to be able to say that you could be in a country or pay into a country or collect in a certain currency. And certainly at the outset of the internet and during the startup era, that was certainly enough to both attract investments and attract buyers and sellers to the platform. But as these commerce companies have matured, and as the pressures around market growth, scalability, and continued investment have matured inside those organizations, they've been forced to very rapidly create very complex and real-time treasury systems where they maintain liquidity in certain countries, for instance, they net internally for as many flows as possible, so that the ins and outs, the buying and the selling, will allow them to do the least amount of FX and the least amount of cross-border payments possible. They've also started putting in place a lot of innovations around being able to track not just the sales and the obligations around the world real time, but to be able to push that out into the business itself, so that someone buying something on the internet at a very small amount can run all the way out to the supply chain operation, run into finance, run into FX and liquidity in different ways as it's needed through the organization, but essentially allowing the organization to work in a much more joined up manner with regards to the needs to make, receive, or create FX conversions to allow for liquidity around the organization. And I think these kinds of trends, which started out in kind of the pure payment e-commerce companies, have moved out into more retail companies, moved out into travel, moving out into airlines. And I think you'll only see those trends move further and further into what I'd call more traditional treasuries, whether they're manufacturing, whether they're consumer retail oriented, et cetera.
Okay. Oh, wonderful. So space to watch there. So I don't think we can have this conversation without touching on regulation and how it's impacting and supporting cross-border payments. Anand, have you got any key points there?
Yeah, absolutely. And I think to a lot of the points that Mike mentioned, right, as we start to think about more FX options, more countries, it's important to ensure that when there are two banks, two fintechs, two companies talking to each other, there is some standardization to how transactions are being conducted around the world. So to that extent, there is a lot of effort being put in from a regulatory standpoint to ensure that we are complying with global norms, we are complying with global compliance requirements around visibility and transparency of payments. But I think one of the most important initiatives that do exist out there in terms of simplifying the cross-border payments landscape is the G20 initiative. So it's the G20 roadmap for enhancing cross-border payments. And the initiative, what it basically says is that it aims for 75% of cross-border payments globally to be credited to the beneficiary within an hour by 2027. Right, so it gives a timeline to everybody to say, look, you need to improve your systems. If they're not in a place where they can make these cross-border payments already, then you need to be able to improve those systems to ensure that you're meeting this timeline, 75% of cross-border payments to be credited within an hour. Now, it might be helpful to sort of put this in context of what it means for globally for visibility and transparency, and what does it mean for companies who invest in screening systems as well, right? Because in a lot of places, especially with the emergence of fintechs around the world, the fintechs are usually set up local bank accounts and then they need to disperse out to beneficiaries locally. But the reason that they're doing the disbursement is because of a transaction that occurred in some other part of the world. So how do we ensure that the ultimate sender details are captured in the payment instructions? Are we able to screen for these payments on an end-to-end basis in all of these markets? That becomes an important consideration from a licensing and a compliance standpoint as well. The other angle would be around data privacy and protection. So you're seeing GDPR in Europe, the impact on cross-border data flows. I think that's an important angle for all banks and financial institutions, and any sort of e-commerce and treasury players to be aware of. And I think on the more interesting side, one of the more recent changes that we're starting to see is instant payments is predominantly seen as a domestic payment evolution, where it's helpful within the domestic payments landscape. But especially in Asia, we're starting to see a lot of regulatory focus on developing cross-border payment linkages in Asia. And some of the main examples here are Singapore, India, Thailand, Malaysia, for example, where each one of these countries has their own local instant payment scheme. But there's now an effort from the regulators to say, look, we're all in the same time zone. There is a lot of cross-border commerce happening between our countries. Therefore, can we actually link our real-time payment schemes to create a truly cross-border real-time payment scheme? And this is now live on a pilot basis between Singapore and India. Singapore and Thailand have connected their real-time payment systems as well. And similarly with Singapore and Malaysia. So we're starting to see a lot of those connections that are happening between the domestic real-time payment systems that sort of go to show that in a few years from now, the evolution of these instant payment schemes will invariably result in a more global cross-border real-time payment scheme as well.
Absolutely. Well, what a great discussion. And a big thank you to you both.
Thank you very much for having us.
Thanks, Sarah. Thanks, Anand. What a great conversation.
A big thank you to Standard Chartered's Anand Natarajan, Head of TMT Cash Sales, and Michael Oskar Kleinsteuber, Head of Standard Chartered Prism FX for Europe and Americas. I'm Sarah Rundell from Treasury Today Group. Thank you for listening, and if you'd like to hear more of our podcast episodes, please subscribe wherever you get your podcasts from.